Hey Rebels, welcome back to the channel. In this video, I want to discuss an indicator that's kept me on the right side of the market this entire bull market. It's told me when to hold when others were panicking, and it's told me when to sell when others were euphoric. If that sounds good, like and subscribe, and let's just dive right into the video. I also want to take this time to thank all of my new subscribers. I've had a lot of new subscribers lately, a lot more engagement on the videos. That's really helpful. I appreciate that. So if you like this video, please give it a like, leave some comments down below, and let's just dive right in. So I know that there's an ocean of indicators out there. It can be a little bit overwhelming. I have up here Coin Market Cap and what is this? Coin Glass. There's just a multitude of different top indicators, and it gives you kind of a warm fuzzy feeling because you can just go and scroll on these pages at any given time and be like, okay, good, the top's not in, and this is very nice. The problem with this for me is that Bitcoin is such a new market, and crypto in general is such a new market, that a lot of these models I don't think are going to hold up over decades and decades. I've seen even one simple one would be like the MVRV. I've noticed typically trends a little bit higher or lower every cycle. So we're just not going to get the same signals every cycle. I don't believe. I just don't believe there's enough data, simply put, for these indicators to work reliably cycle after cycle. But I have an indicator that I like to use that has basically helped keep me on the right side of the market every single time. And I just want to discuss that with you and walk through some market action here, just walk through the entire bull market basically. It's the 50% tool. I talk about it all the time on the channel. I use it all the time on the channel. That's the other reason I wanted to make this video, is just to make this familiar to you and just basically just show you how powerful it is. Okay. So the 50% tool is just the Fibonacci retracement tool, nothing special, but the settings are 0, 0.5, and 1. And what that does is it gives us a little calculator to calculate the midpoint. So if you're in a range, it gives you the mid range. If you're measuring a move, it gives you the halfway point of that move. And that tells you a lot more than you would think. And I like to view the market in terms of strength and weakness. So anything in that top half is strong, anything in the bottom half is weak. So I'm just going to go over the major moves in Bitcoin this cycle, and then I'm actually going to walk through like the entire bull market of the S&P 500, because it just is kind of amazing how this tool works. It acts like a magnet for the markets and gives you a really good indication of the strength and weakness of the various moves. So starting off from the bull market to this high in March, we had basically peak euphoria here. The ETF was launching. Everybody was really excited. We were, reaching these all-time high prices, and we were just thinking we were ready to, break on for higher prices. And once we found out that that wasn't going to happen and we started seeing this correction, everybody was in a lot of panic at that time. But just having this simple tool right here from the lows to the highs told us that we were consolidating in strong territory. That was about 8 months. For 8 months, there was really no major signal that anything had changed, even though the sentiment had changed quite drastically. So that was one use of that tool that was very, very helpful. And I'll just drag this up, and we can just keep dragging this up with the moves. And same thing happened here. We had that nice push higher into the inauguration. Everybody was very excited, kind of peak euphoria here as well. And then we had, I believe this was the tariff scares, so huge, major, kind of uncertain event happening in the market, and the market comes down and crashes. Now, what we see here is we didn't have any consecutive closes beneath this level. So we were looking a little dicey there for a while, looking like we may want to come down in here into this weaker territory. But we never had that. And so when we had this price action happening here and we didn't have those consecutive closes beneath that level, it was a huge leading indicator that prices were likely to go higher than lower. Okay. Even though everybody was calling for lower prices, the bears came out during these lows and were absolutely screaming that the bear or the bull market was over and everybody's faked out. And this was the top, and it's all downhill from here, and recession and all the rest of it. Okay. But that was proven wrong. We got support on this 50% level, which if you study these enough, you will find very often coincide with just regular old support and resistance. It happens quite a bit. Markets are just attracted to them. So we move this up to current day. There's a lot of uncertainty and fear in the market right now. Lo and behold, we're just consolidating in strong territory. So nothing really to be afraid of until we start seeing price action beneath this level. So why don't we go into the S&P 500 and we can just walk through that bull market so you can kind of see the bullish and the bearish cases for each. So I'm not going to go. I haven't gone back before the GFC, but we're going to start from the GFC and actually just get an indication of the strength and weakness and see what kind of signs we can see and walk through the entire cycle. Okay. Obviously we had basically the dot-com boom before we had the great financial crisis. And what you can see here, if I just zoom in a little bit, is we did poke our head above the 50% level and started consolidating above that 50% level. And in fact, we started seeing higher lows form above that 50% level. That was one of the first indications. That higher low, finding support there, obviously coincides with that support and resistance, but this 50% tool tells you that it's consolidating in strong territory, most likely going to go on for higher prices, and that's exactly what followed. Because you would basically be looking out for a lower high at this point, right? But this told them ahead of time, that this was actually a stronger move, and that the market was strong. It was showing its hand, telling you that it was in fact strong. Now I'm gonna come over here and find another area of the market that would have given you an early lead, because you can use this 50% tool on different time frames, right? So if we were to use the 50% tool for the entire range, that wouldn't have helped us out too much because we would have had lower prices much sooner. Sorry about that. It just basically cut through that 50% level. So yes, this was a clear sign that the market was weak, and you can just see how strong that signal is, down for lower prices. But you might want to get a little earlier lead on the market. So let's just drag this up, and you can see what I'm talking about. So as we get a little bit closer to the market, we can see here, we were consolidating above this area for a while, and that was strong. Once we dipped beneath it down here, we actually had a lower high at this level. And so when you have lower highs beneath this level or higher lows above this level, that gives you a huge indication of the strength of the market and what's likely to occur. So obviously, at that time, we were in a downtrend, and the question would be, are we going to go higher or are we going to go lower? Well, this indication right here of this lower high beneath this 50% tool gave you that indication that it's likely that you were going to start seeing lower prices. And so what you might have done at that point is put stops beneath that level, right here at this swing, knowing that if those lows are breached, that's probably going to confirm that signal. And that would have got you out at a 20% loss. Now that's actually not too bad considering, if you had bought the exact top, that others experienced almost a 60% loss in that great financial crisis. So a 20% loss compared to a 60% loss, uh, pretty, pretty spectacular there. So that was all early leads. Okay, so now let's just work our way out of here, and I'm going to speed this up a little bit, working our way out of the great financial crisis. Coming up here, basically blasted right through the 50% level, consolidated in strong territory, never even got a retest before seeing higher highs. So then we marched that bad boy up. Same thing, never really came down to get below this 50% level, likely to go on to higher prices. And you can kind of just keep marching this tool up to see, you know, this is where things get a little bit tricky, right? So like right here, a little bit messy signal, but if we just drag that down, there would have been a lot of fear during this time, but you would see that it's just for the entire range coming down to test that 50% level until you start breaking down below this, probably not the worst thing in the world, okay? So now let's just move on. When was this? Is this not COVID? Was this COVID? This was COVID. Okay. So, same kind of thing. Oh, I got it for this kind of scare here. This was a pretty nasty scare over here in December of 18. Same thing, low to the high, put your 50% tool on, came down, nice V-shaped recovery. How it reacts to these levels is very important. And then the reason I have this up here on the chart too is that this was the COVID crash. And now let's just drag this indicator up here to the low of, where was it? This was COVID, right? Sorry about this, guys. I did this, I kind of was playing with these tools a little earlier, and there's one of these moves. It might have been the whole range. One of these whole ranges. I think I just had it on the whole entire move there. 50% basically still in the strong territory. It's a huge, huge range, but it came down. Let's see, that wasn't it. I'm sorry, now I'm botching it, guys. I did walk through this a little bit earlier. But you can see as you start playing with these levels, and here's the deal too. There's support and resistance right there. And what it would have told you is that in this entire run, the upper half again strong, coming back down for a retest. Very volatile. Obviously, that would have been a really hard one to hold, but how it reacted to that level is very important and would have probably given you a lead on the market while everybody was absolutely freaking out and losing their pants. So then I went from the COVID low to the high. We had that 1 year bear market in 2021. Now, that 2021 bear market there would not have been a fun one to hold, but how it reacted to that 20 or 50% level, again, coinciding with some support and resistance, telling us that at the very, and this is what I remember the most because I got into the market about here. At least in Bitcoin. And when I was, basically new to the markets and had first heard about Bitcoin was basically at the peak of that market. And so I had to ride this bear market down below. And right here, everybody was calling for lower prices. Everybody was screaming for lower prices and that a recession was coming and it was all over. And again, nice and cleanly. They're not always like perfectly clean. Like you saw the COVID crash one, that was like a little bit muddy. I probably curve fit that one a little bit. But this one gave us most of them are pretty clear signals, right? So this one's very clear, like right to the T, right on the 50% level, and then we start trending higher from there. But if you didn't want to have to live through this, bear market, that 1 year bear market, that kind of sucked. That wasn't very fun. So what were some of the earlier indications that we might be rolling over in a larger way? And that would have been, let's see, what did I have this here? No, I think I did just have it here. Okay, so subtly, basically, if you're going on a shorter term time frame, right? Like just trying to really zoom into the markets and see how does this react. We were trending up very cleanly, starting to show some weakness, and just very clear in the short term. We just were not getting be able to get any consolidation above that level. So it was consolidating in weak territory, kind of giving us just the subtle clues that this was a little bit more than, in fact. Okay, there we go, dragging it down to here. I'll just measure this move. Sorry about that, guys. I did this whole thing before, but anyhow, so this was that range here, just not able to consolidate back above that 50% tool, right? So that was the earliest indication, starting to get lower highs near this 50% tool. Once we broke those levels, then we kind of knew it was all over, and prices came down even more significantly. So if we would have just measured this move to give us an idea, like, is it going to recover? You can just clearly see that we weren't able to come back and recover into strong territory. We failed there, and that was the first signal that we were likely to see lower prices. And you could have probably gotten out on that daily swing just to get out of the market as until we're starting to trend higher again, just to get yourself out of the market. And again, you would have saved yourself a pretty penny there. So you'd have lost 8% instead of having to hold an entire year to lose, 30%, right? So that's pretty granular, getting into the nitty gritty. Like I said, these tools are really nice on the higher time frames, and as you zoom in, they can be very useful in giving you indications. So here's the other one. We had the tariff scare this year. We had these, we basically just hit a ceiling here. Major crash. Nice V-shaped recovery. This seems obvious in hindsight, but zooming in on a daily, quite a bit more scary, especially this zone right here, looking kind of very similar to what Bitcoin's doing right now. But yeah, low to the high from coming out of that 2021 bear market to the high to the T. So basically, if you were on the channel, following the channel, we watched this entire move pretty much without any concern, knowing full well that there was a lot of support, especially markets very often will come out and come back down to retest the highs, and that's exactly what it did. Like I said, the 50% tool also gives you support and resistance, but it tells you the strength and weakness. And the market was screaming at that time that it was very strong. So that was an entire bull market. That was 18 years and a few great examples of how this indicator would have kept you on the right side of the market, and also showcases how well this tool works in any market. I know there's a lot of indicators out there that people kind of get glued to, and they really want to hold their hand and ring the bell when it's over, but nobody's going to hold your hand, and nobody's going to ring the bell when it's over. So as far as a tool goes for telling the future, this is one that has pretty much come the closest to telling the future that I have found. So, yep, you're going to see that a lot on the channel. That's what I use the most. It's my favorite tool, and you can use it to basically formulate your own plans and strategies, right? So again, if you want to get really close to the market, pop that bad boy up on Bitcoin. Yeah, we're weak right now. In fact, if I drag it down from this move to their move, we're consolidating in weak territory, giving us an indication that you can see how we came up here, wicked below. Sign of weakness, was not able to quite get above that level right there, and just basically telling us that, we're not ready to go higher prices. And if we drag that down here, just measuring this move, consolidating in strong territory. So it really helps you get an idea of the macro and the micro, right? So on a macro scale, obviously we're in strong territory for this whole move, this run up from the April lows. We're consolidating in strong territory despite the massive amounts of fear that are happening right now, despite the possible distribution that we're seeing right now, like so fashion distributing. In fact, I'm going to use this as an example in this previous move. What could be different in this move is where the 50% tool actually lands. Sorry, guys. I wasn't planning on showing this, but I'm just seeing it in the charts quick. So I like to ramble, and so I'm going to ramble. That's just the way it is. That's just the way it is. Okay, so we saw this distribution. We were in strong territory, just like we were here, having this kind of expanding range, typically a distribution sign, and that's exactly what happened. We came down here, but we accumulated in stronger territory. We can see that we just kind of had this little accumulation zone. Why don't I turn it green to make it look nice? We like that. Yeah, okay. Consolidating in strong territory. So now we just have to see if Bitcoin's going to repeat that pattern. Is it going to do something similar, or are we going to distribute and accumulate in weaker territory? Now, that does not mean that it's all over. It just means if we do come down in here and consolidate in the weaker zone, any rallies from here should be treated as a weaker rally rather than the rally that comes out of the strong half of that tool. This was a nice strong rally, getting everybody very excited, volume coming back into the market and all of that. So anyway, if you made it this far, please like and subscribe. Leave some comments down below. I'd really appreciate that. If you made it this far, why don't you leave a money bag emoji? That'll help me out. See if anybody's making it this far. I really appreciate it. Leave some comments down below. Was that helpful to you? Do you see yourself using this tool in your plans? All right. Thanks, guys. Take care.